Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, everyone. Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back. If you wouldn't mind, if you haven't already done so, is please subscribe to the podcast. It's on 30 different channels, all your favorites, including the big gorilla. Apple, you can, if that's what you use, either one's okay with me. And while you're online, before you leave online, please visit globalinvestoragent.com. This is where you will find investor agents, not typical agents. These agents are given the right tools. They're taught the right strategies. I know this because we teach them. And they have everything they need to identify, analyze, and negotiate on and off market deals for yourself and for me. And if you're also interested in other opportunities, we're open. We're not just a one horse, one trick pony. I'm not opposed to syndications, to REITs. I've created a closed-end mutual fund myself. We've even invested in other commodities. So this is really about you, helping you buy your freedom with your own efforts, and sometimes your own money, sometimes other people's money. So without further ado, we got a great guest today. Chris Finlay is on. And Chris, first of all, thank you for doing this. You've got a great life history, a lot of value to bring to the table, and I'm so glad we have you on board today.
Well, thank you, Gary. Appreciate you inviting me.
You're absolutely welcome. So I understand you're down in the Lone Star State now, but if you wouldn't mind giving us a little bit of history, you started off in another industry, which was kind of interesting. And if you could explain or kind of give us a history, how you got from there to where you are today, and we can talk about some projects you're working on and a little bit about what you do today,
Sure. Well, I started out as an airline pilot for Eastern Airlines, and I say it's the best paid hobby in the world, and because most of us would do it for nothing, and it was great. And while I was there, in those days, pilots flew about 2 or 3 days a week, so you had a lot of time on your hands, and most pilots seem to be very entrepreneurial and always involved in other things. So I started getting interested in real estate, and my father-in-law happened to be in real estate as well. So I figured, hey, this is a way for me to go. And then I was able to get hired by a commercial real estate firm. At that time, I was living in Connecticut, flying out of New York, and this firm was a big commercial firm, and so I basically worked there Monday through Friday, and then I'd fly out on the weekend and do my flying job, right? So and learn the business, and then we moved up to New Hampshire and opened our own business in 1980, and people ask me about the current situation with interest rates and how difficult they are. Well, when I opened, the prime was 19.5%. So, that's more than double what it is, way beyond what it is now. So, we started out as a full service brokerage, appraisal, and management company, and then expanded all over New England. And then, the late 80s, early 90s, there was a massive crash, probably the most serious economic downturn that I've experienced in my life. The RTC was, created in order to take care of all the S&Ls were basically shut down. And the FDIC came up into the Northeast, and fortunately, we didn't have any bad loans and stuff, so we were able to work for the FDIC, and we became one of their largest asset managers in the New England region, and that really gave me an opportunity to see what happens when things go south, and you could see where people can make mistakes. You really understand risk, and you understand the most vulnerable assets. I learned a tremendous amount from that. And then late 80s, early 90s, we moved into development, and then we pretty much focused on multifamily development all the way through, say, 2010. And we developed about 45 projects, several of them using the affordable housing program, which is low-income housing tax credits, and did that, pretty much all over the country except the West Coast. And then after 2008, the market changed, and we had the Great Recession or whatever they call it.
Yeah.
And then we, fortunately, we had finished all of our development projects, so we were in pretty good shape. And at that time, we decided, hey, if you can buy an asset, if you can buy multifamily for 50 cents on the dollar, why build it? So, we sort of switched our strategy from being developers to investors. And, from then on, we've pretty much focused on value add investment, multifamily, until recently. And then now recently we've moved into senior housing.
Okay. That's a pretty good move there too. So, if we could talk about that, let's talk about the senior housing a little bit. I know when you look at the demographics and social graphics of the U.S., there is a large portion of people entering that time frame in their life where they're looking to downsize or move into. Sometimes it's assisted living, sometimes it's independent living, and there's differences there. But also, this is something I've noticed in the last couple of years, Chris, and I don't know if this is the trend, but historically they were, I don't want to say institutionalized, but these were established retirement homes that people would go to, 1 floor, 2 floor, 3 floors, anywhere from, say, 50 to hundreds of beds. Well, now we're seeing it in the neighborhoods, in residential neighborhoods, people taking single family homes and converting them. And I'm not sure what the rules are and the laws are and the zoning and occupancy and all that, or even the profit model. But in what sector, kind of explain what your model there, if you don't mind, and how people can participate in that.
Yeah, you're absolutely right. Look, if you look back at 2010 to 2020, multifamily just boomed, right? The rental market boomed primarily because of the millennials. So you had a massive population band of millennials there that, wanted to get out of mom's basement and go get a place to live. And so, multifamily apartments just boomed. The whole rental market boomed, and it flowed over to everything from single family all the way up to 300 unit properties. So I think we have the exact same dynamic here, looking at, from 2020 forward, and really the magic year is 2025. And that's when the baby boomers hit 75.
Okay.
And, currently, like the baby boomer population, when you think of it, today, we have 10,000 people a day turn 65 in America.
Wow.
10,000 every single day turn 65 in America. So that senior population is just like a rocket taking off. I mean, it's huge, and there hasn't been very little production of senior housing since 2019. There's been a total gap. There's none happening now. So you're going to have 5 or 6 years where there's basically no production, but, so zero production, and, which is a flat line. And then you look at the growth line, which is, straight up. So, we think it's going to be a really good spectrum to be in, and it's a great opportunity. And I think it affects both single family, duplexes, all of those. Now, the single family project you were talking about are these home healthcare, opportunities where you can get that license through the state, and it's a place where, on a small scale, you can take care of folks. We do the bigger, assisted living, memory care, independent assisted memory care. Most of our facilities are in the 80 to 100 unit range, because it takes a lot of staff to run one of these. It's a 24/7 operation. You need nursing, you need round the clock care. And so they're a big operation, and they're very, very operationally focused. It's much more than just real estate. I used to say multifamily is 90% real estate, 10% operations. And, operations has an impact, but most important is your real estate. Here, it's 90% operations, 10% real estate. So if you don't know how to operate one of these, you're in big trouble.
Yeah. Yeah. And I'm gathering because of that, the operations intensive environment, it has to be a large enough scale to make it worthwhile. In other words, you couldn't do that probably with a 20 unit facility. It would just wouldn't, the profit doesn't justify you're just not going to work,
You're absolutely right. You nailed it. I mean, if it's, from our purposes, 50 units is barely marginal.
Yeah.
And you really need to be 100 plus to justify it,
Yeah. Now, so when you look for these facilities, are you raising funds and then purchasing in like a syndication, or is your organization purchasing them privately? And also, are you purchasing existing operations? If operations are already in place, if you mind, can you go a little detail on that? That would be great if you don't mind sharing.
Sure. So, we sold most of our multifamily portfolio in 21, about 85% of it. So we dropped from like 8,500 units down to about 1,000 units. And, we redeployed a lot of that capital into the senior space. So, so we've bought for our own account, basically, number of the assets we've purchased. And then also our model, both in the multifamily for the past, since 2010, we do what's called joint ventures, where we bring in usually one institutional partner and ourselves. So the institutional partner would come in for 90% of the investment, the equity, and then we would come up with 10% of the equity. And, our normal deal size is probably 50 to 100 million. So, the equity check was probably 15 to, 30, 40 million. So these are the very big investors. And that's pretty much all we've dealt with until recently. And what we're trying to do, Gary, is do two things. One is, if the investment's big enough to entice a institutional investor with us, what we'd like to do is take a bigger chunk of it and then syndicate it out to investors so that they can participate alongside an institutional investor. So in other words, let's say we buy a $30 million property, we need 10 million. Instead of me just taking a 1 million chunk, I'd take a $3 million chunk. The institutional guy would come in with 7 million, or the family office come in with 7, and then I could sort of syndicate out that 3 million and allow other investors into that level of deal, which they normally wouldn't have a shot at. So that we're exploring that. We're starting to do that. We did a recent deal on Cross Street, and 6 months ago or so, and raised 3 million in that deal that way. And we're trying to launch our own portal and do it ourselves direct.
Yeah. Okay. All right. Well, that sounds really good. And so there's a way for people to participate, passively. They can be an investor in one of the projects there. Now, what about the areas of focus? Are there certain parts of the country that you focus on, or is it really just a matter of, everywhere? I've traveled all over the country teaching for years, and you can see the population aging. And I'm the tail end of that baby boomer group. I'm January 1963 born in Germany, and so I'm bringing up the rear. But what was interesting, here I was living in Allegheny County, Pennsylvania for 2 decades a while back. And at the time, they were noted for having the second most elderly population in the country, only behind Dade County, Florida. I don't know if that's true anymore, because I've traveled all over, and I can tell you that there's a lot of need out there, demand for the housing. So I'm sorry to ramble on there, but assuming that the need is everywhere, there's still areas of focus because maybe the laws are more favorable, or just the cost basis and profit margins are better in certain areas. Is there any logic behind that?
Absolutely. I mean, yeah, you made a very good point. Yes, look, certain states are certainly more onerous as far as licensing and that kind of thing. But our strategy is national. We feel the need is national. Now, obviously, we do market studies on every specific asset to make sure that there's demand there and that the competition and so forth is such that it'll work. But look, the need is pretty much everywhere. We don't go to really, I would just say, very small markets. We try to stay out of in most cases, but even there's a demand. I mean, the interesting, look, the industry has really been hit hard. I mean, I don't care who you were, you could have been the best in the world. Going through COVID was absolutely devastating to this industry. I mean, really devastating. Obviously, skilled nursing, we all read about that in the paper, and those poor souls just got clobbered. But even the independent assisted memory care throughout America really took a hit, and beyond anything they could control, right? I mean, it was obviously nothing they could do about it. And so, coming out of that, there's been a tremendous amount of distress, and they're still recovering. And so what's happening is that a lot of the smaller, weaker operators have just basically got to throw in the towel. So so there's it's tough for them, but it's great for us because we have the opportunity to buy it at 50 cents on the dollar. I mean, it's just an amazing time. I equate it to similar. If you were out buying multifamily in 2010, it was just, a feeding frenzy, right? I mean, it was just great deals all the time. You could buy great properties at 8.5 cap, right? I mean, remember those days? And so this is the same. You can buy great assets at just an unbelievable cap rate, and you're gonna have to fill them up. You're gonna have to work them, but it's just a great opportunity. Not only the timing from a demographic point of view, but from a market point of view, they've been clobbered, and they're they're really down.
Well, I appreciate that insight. I will tell you, in the last, what they call the Great Recession, I launched my brokerage in January 2008. Everybody thought are you crazy? But we just focused on investing in investors. And so as a result, our business grew sixfold in those next 3 years. And we had other brokerages trying to buy our brokerage because they were straight. I mean, they had, their business had dropped in half, and we looked like we had some magic formula. And I would just tell them plainly and frankly, I said, the reality is I just work with investors, and for every investor, we're doing 4 transactions a year versus 1 transaction for the mainstream big box brokerage companies. And for me personally, we were all into multifamily, and you're right, it was crazy. Our volume of transactions, thankfully I had a systems background, and we were able to apply that to keep up with the pace, because it was just, I think in those years, and it was like a 5-year period, if I'm not mistaken, we had done over 3,000 transactions just in that short period of time.
Wow.
And I'd already done a bunch before that, on my own and through other ventures. But it's an amazing testament to the human experiences. Like when that happened, if you look at the news, you would think the whole world's falling apart. But the reality is it was the greatest transfer of wealth in the history of recorded history of the human race. And so the properties, the old saying is they're not making any more land. Well, that may be true, but even improved upon land, the buildings. It's not like the buildings went away or burned down or got bulldozed. They just changed hands. We went from one person hands to the next person hand, and that's what's happening here. It sounds like in the senior living. So I'm really intrigued by that. Now, as far as timing, it looks like to me the demand's going to continue to increase. So we still have a growing need. But as far as what you saw because of the pandemic years, will that continue on for a couple of years? What are you foreseeing there as far as your model goes?
You mean as far as the pandemic and that kind of fact, or the
Yeah, the buying opportunities. So like
Yeah.
we'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them as well as from me how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast.
Yeah. No, look, I think right now there's great buying opportunities, and what we see is I think the market's very tight right now, very tough in the sense of getting a deal done in this space. I mean, the most of what we buy, we put bridge financing on because we have to either lease it up or fix it up. And so we don't go and put a Fannie or Freddie permanent loan on it. We do bridge financing, 2-3 year bridge. That's very, very expensive right now. And so that's put a damper on us buying as well as everybody else buying. And, that's going to have a negative, that's going to have an effect on prices. So prices, in our opinion, is going to continue down. And, until this sort of interest rate scenario changes, which who knows when that happens, but when it does happen, then I think we're off to the races. And the only thing, there's a lot of big institutional money on the sidelines for this space. I mean, all the big guys in New York, the Blackstones, the KKRs, the Goldman Sachs, all the big guys, they know this strategy. They know demographics. They know this is going to be, a boom. And but those guys have to buy in big numbers. Many of them have a minimum $50-100 million investment. So we stay under their radar and pick off the onesie twosies and aggregate it. And then when we get to a scale of say 30, we can go to those guys and bring them in as the investor, and they pay top dollar because portfolios sell for a much higher price than one-offs.
Yeah. You're right. What's interesting is one of my opportunities back in the last recession was there was an endowment fund, and I think it was called White Oak. Now, we did talk to BlackRock too, by the way. And this was when I was in Pittsburgh, and they came to visit me because they somehow or other they found me out, looked me up, and saw what we were doing, and figured I was the guy to go to in Pittsburgh. And I asked them, well, how much are you looking to deploy? And they said, just $100 million. And I said, you deploy that kind of money here, you're going to change the landscape. I said, why don't we start with something more like 10 million and work our way up from there? And so it was interesting. I met, I guess I should be careful with names. So I met a tobacco commodities broker from Wall Street. A lot of Wall Street people were running to real estate. It was crazy, creating brand new hedge funds. And so he's the one that helped us build that closed-end mutual fund. He had the contacts on his end, the money end, and I had all the contacts on the real estate end. And we came up with a beautiful arrangement. It lasted for years, and I got commission income out of it for the brokerage. I got property management income out of it for the brokerage, and I learned an awful lot. Just an amazing experience. But any case, one of the things I wanted to talk about is so real quick, back to those guys, the Wall Street guys. They started buying up big tapes, tape being a block of mortgages from big financial institutions, because everybody realized at that point that, the truth was out. There was a lot of bad paper being pushed around from the mortgage brokerage business to the banks. The banks thought they had good paper, and they really didn't. And you saw what happened. I mean, it's all in the history books and the news channels. But we learned a lot from that. And one of the things that they did is they would buy a large tape. It could be $100 million tape, and they would take some of the properties in there and do workouts. They would help the people work out their deficit on the loan and become whole again. Others, they would do cash to keys and say, look, we'll give you $1,000 if you can be out by the weekend. We'll even pay for your moving truck. They call that cash for keys. Others, they would keep and fix up and sell for profit. And others, they would keep for rentals. And I thought, they're using our model essentially with their Wall Street guys. So they were really brilliant. And it did help kind of change the landscape a little bit. And that's when Warren Buffett said, 2011, famously, if I could buy 100,000 homes, I would do it. Well, he didn't do that. He bought Prudential, right? But he also said we're becoming a renter nation. And we went from 2/3 home ownership and 1/3 rentership in places like California, where it's nearing almost 50-50. It's close to 50% rentership. And now their policies are driven towards more rentals, not home ownership. There's an incentive there now for investors to build, affordable housing as long as they rent them out, and the government would pay their rents, right? As long as they don't disqualify people for financial purposes. But you and I know in real estate, that's the one reason why you do disqualify people is for financial reasons, Yeah. So I just see the landscape changing in the traditional rental market. So I commend you for changing your portfolio. Like you said, you had sold about 85% of the multifamily. And I'm not sure if you saw that trend maybe continuing across the country from California heading east. I don't know, but it just seems to me like there will be more government control going forward, just like in Canada. I'm not judging. I'm not trying to make a political statement. It's just a fact that as populations increase, you need more regulation, and there means more legislation, and that means more government control. But I know there's government control in the senior housing market, but that need, you just can't get away from the simple mathematical fact that the need's going to continue to increase. And what's the projection is until like the year 2050, or what's the timeline as far as the baby boomer generation and an increase in demand for senior housing?
Yeah, look, let me comment on your moving to renter. I couldn't agree with you more. And we're also in the multifamily space. So fortunately we were able to sell at the top of the market, and the market's down probably 10-15% from that. I think it's probably going to go. So when we think the market's at the bottom, we're going to buy again. So we're not out of it's always a big part of our business. But you're absolutely right. It's becoming so difficult for young folks and young families to buy today that I think that there's no question the shift to renting is going to continue, and it's going to grow. And I think that's why you see a lot of the single family rentals, or you see people buying individual homes and renting them rather than living in them and that kind of stuff. So there's no question that's a huge move, and I think that'll definitely continue. I think that's absolutely the case. Yeah, with us, I think the seniors moving up the scale. Normally, people move into our properties around 75 to 80. Is the range for independent, and then it's usually about 80 plus for assisted living. Normally, if you took the averages, so that population is moving up as the big baby boomer pushes in there. Front end of the baby boomer wave is like 77 now, 78, something like that. So so it has another 2 years. Like I say, 25. The first group of that is 85 million in that baby boomer. 85 million. So, so that's going to, and then another thing that I think that intrigues me about this senior space is we're predicating all of this on basically the average life expectancy for a male in the United States is currently 79. That's the average. Mm-hmm. Now, with science and technology, the way things are happening now, that's going to incrementally increase. Just in the past, 10 or 20 years, we've averaged like one and a half years every 10 years. But
Okay.
now we're going to be probably increasing life expectancy 5 years in 10 years, because of
Yeah.
science. And so nobody's even tacked on what impact that will have on senior housing,
Mhm.
so it's really a unique sort of
Yeah.
focus. But hey, we still love multi. So it's hard to beat multifamily or rental housing
Yeah.
as an investment. It simply is.
That was my bread and butter, all the way through. So, hey, if you don't mind, I know we're getting close on time here, but I couldn't help notice something you're doing in service to the community called Shelter to Shutters. Would you mind elaborating? I want people to know what you're doing, and maybe it's something they can participate in too, because it's a tremendous need. I don't want to take up a lot of time. I'd rather have you talk, but my son and my oldest brother both are involved with both doing census for homeless, and also my son's involved with a men's shelter. And just travel around, folks, and you'll see the homeless population is also on the increase. So would you mind talking about the Shelter to Shutters?
Yeah, absolutely love to. Yeah, so it was founded by my son,
Mhm.
and basically the premise is that you take people out of a shelter, and the idea is if you're running a multifamily property, it's this, it's very hard to hire a maintenance person, right, or entry level staff. It's really tough. So here we not only bring them into the property and give them a free apartment, so they get to live, they have a place to live, but the most important part, they get a job.
Mhm.
So great to give them a place to live, but without a job, how are they going to sustain that? So
Yeah.
we bring them in and we put them on a training program. And if they want to go to the maintenance track, they start out as as junior tech and so forth, and get all their tech, their tech certifications and so forth. We send them to school, and it's really been fantastic. And the same with the leasing agents or housekeeping staff or so forth. I mean, we bring them in, put them in a job, they have a
Mhm.
house or have a place to live, and then they grow from there. And it's really been very, very successful. So we're rolling it out. We're now in I think 5 or 6 states, and it's really it's really growing. And it's NMHC, the National Multi Housing Council, made it their nonprofit charitable focus
Mhm.
last year for the whole nation. So it's really
Wow.
yeah, it's really great. I mean, it's really great to see these people come from a shelter, put their lives
Yeah.
back in order, and then have a job. And then if you're a good maintenance person in America today, you can get a job in a day anywhere.
Oh, yeah.
So the opportunity for them is terrific.
Well, thank you for providing that valuable service. It's a great philanthropy, and I commend your son too for getting it up and running like that, and have it spreading in multiple states like that. I created something called the Healing House Foundation, and what the service there is to serve people initially who recovering from drug and alcohol addiction, getting reunited with their families in what we call safe houses, or healing houses, that are away from the environment where they got into trouble, so they are not as likely to go back into trouble, and they have time to reconnect and to rebuild those loving relationships. In any case, just like all good things in life, been a struggle for us to get that off the ground. We have it established, but um, you know, it's quite a challenge to do that, but it's very worthwhile. What's amazing is if you think about the big picture of our industry that we're in, real estate, you know, most people focus on the profit side of it, and I know I certainly did that for a lot of years. But when you're out there, you can't help but notice it covers a wide spectrum of social graphics and demographics. And if we can help the people at the neediest end of the spectrum, what we do is we lift the tide. And they know the old saying, a rising tide lifts all ships. Um, if everybody can find it in their heart to give, and if there is there a way for them, let's do this. I know we're getting close on time here. how can they reach out to you regarding what you're doing and how they can participate in some of these investments, but also how can they participate in Shelter to Shutters? If you wouldn't mind sharing, websites, emails, things like that,
Oh, that'd be awesome. Yeah, no, Shelters to Shutters, just Google it and it pop right up and you go right to the website there. And there's a lot of videos and testimonials on that from people that have, it's been very, changed their lives. And it's really great. So thank you for that. And for anybody that wants to contact us, it's lloydjones.com. lloydjonesllc.com.
Okay.
And you'll hit our homepage and pretty much everything is on there.
Okay. By the way, I've got to ask you the name Lloyd Jones. Is there a story behind that?
There is, yeah. So that's my grandfather and great grandfather. So on my mother's side of the family was Welsh. And came from Wales, and my grandfather was Jones, and my great grandfather was Lloyd, and so I figured, hey, we'll combine the two of them and call it Lloyd Jones.
Nice.
Yeah.
Okay. Yeah, we probably have a lot more in common. My family, my mother's side, the Llewellyns are from Wales. And,
really? Wow.
Yeah, and the rest. And my dad's all Irish and Scottish, and my mom's Welsh and German. I was actually born in Germany myself. So, but in any case, so folks, if you can write this down, not while you're driving. If you're driving, when you get home, bring this up on the website. This will be in the show notes for the podcast. So you'll be able to see lloydjonesllc.com and also Shelter to Shutters. Okay, if you feel like you want to support folks that aren't as lucky as you and I are. Okay. And I want to say thanks also, Chris, for doing this. I know we went a little bit long here, but what you bring to the table is so valuable, lots of valuable insight on multifamily and senior housing. And it just gives people something to look forward to that's not just what's the fad today. These are good, solid, long-term opportunities, So I can't thank you enough for doing that. Any final words of wisdom you want to share with people before we sign off here?
No, thank you very much, Gary. Really, really appreciate it. And it's been a terrific opportunity. Thank you.
You're very welcome. Okay. So for you listening out there, I know you probably want to get home or get back to work, but please do this if you wouldn't mind. It helps us on the podcast part of the business is for you to just leave a review, just a quick review. We're on 30 different channels. Pick the one you love. Apple's, of course, the biggest. So leave a good review for this podcast. And while you're online, go check out lloydjonesllc.com. Also check out shelterstoshutters.com or just Google that, okay? And before you leave the internet, please visit globalinvestoragent.com, especially if you're an agent. There's just all these podcasts we do should indicate to you that there's a strong opportunity for you as a real estate agent to learn how to invest and work with investors. And click on the Learn More button. It's totally free. You get to actually have a conversation with me, and I'll do a quick analysis of where you are in your business and see if there's something that you can do going forward to incorporate this working with investors. I'm telling you, for me personally, it meant a lot more revenue and profit, a lot more business growth, and a lot more meeting people like Chris today. That helps me too. It doesn't just help you. So be part of the solution. Be part of the future. Do yourself a favor for your business model and add this to your model. And for every investor, you'll find the investor agents trained to work with you on the same website. So everybody listening, I appreciate you listening, appreciate your time. We appreciate your reviews. And God bless you and your families too, by the way. And we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.